Most people chase the loudest stocks in the market, the flashy headlights, the viral hype, the overnight winners. But some of the most powerful income investments are the ones almost nobody talks about. While millions of investors constantly search for the next big thing, some investors quietly collect monthly income over and over again without attracting attention. And one company that built a cult like following around that idea is Main Street Capital, a monthly dividend stock that many newer investors completely overlook. The truth is, most investors are emotionally pulled toward excitement. Fast moving stocks, massive growth stories, huge price swings, because psychologically, movement feels productive. But boring investments who rarely go viral. You usually won't see people writing online about steady monthly cash flow or consistent dividend payments. And that's exactly why companies like Main Street Capital often get ignored, because slow wealth building doesn't create dopamine fast enough for most people. So, what exactly is Main Street Capital? Unlike a normal company selling products, Main Street Capital invests directly into smaller and mid sized businesses. They provide financing, loans, and investment capital to companies that need money to grow, and in return, they collect income from those businesses. Part of that income gets passed along to shareholders through monthly dividends. So instead of owning a single business, investors gain exposure to an entire network of companies generating cash flow behind the scenes. One reason investors become emotionally attached to Main Street Capital is the higher dividend yield. When investors see monthly payments arriving consistently, it changes how investing feels psychologically. Some investors reinvest every dividend payment automatically, and over time, those extra shares begin producing even more income. That's when compounding starts becoming visible in real life. For many long term investors, the goal stops being excitement. The goal becomes stability, predictability, and slowly building income streams that reduce financial stress. But higher income always comes with risk, and that's something responsible investors need to understand. Because Main Street Capital invests in businesses, economic slowdowns can create pressure. If businesses struggle, cash flow can weaken, and investor fear can rise quickly. And like every income investment, this only works if you think long term, not emotionally, not impulsively, but patiently. Maybe the biggest lesson from Main Street Capital is that wealth often grows quietly. The people building financial freedom slowly usually aren't chasing attention. They're focused on ownership, cash flow, and consistency. Because eventually, small monthly payments can become meaningful, not because of one lucky moment, but because of years of disciplined investing. And most people underestimate how powerful that becomes until it's already changed their life. Follow if you want to get paid, not trade.